I'm talking about how you can increase your borrowing capacity. And I like to think of it as the 3 S's. So these are the 3 things that the banks look for when they're assessing your loan application. And they are security, servicing, and your score, or more specifically, your credit score. Let's go through them in detail and see how you can improve each element so that you can improve your borrowing capacity, which is so important for any finance application you want to make in the future. Firstly, let's talk about security. So security is basically the asset that the bank uses to lend against when they're lending you money. And the more security you have, the stronger position you're in and the stronger your application will seem to the bank. So security can come in the form of an equity in an existing property, or it can come in the form of savings that you've got saved in the bank. So one of the things you can do here to try and improve your security position is explore your assets that you currently have. For example, look at your properties. Is there a way you can actually increase the value of those properties? For example, could you spend a little bit on doing some simple cosmetic renovations that will actually add significant value to your property so that when we go to get the property valued, there's more value to lend against? That's the first thing. In terms of savings, have a look at your money management and see if there's any way that you can actually enhance your savings and increase the amount that you're regularly contributing to your savings to try and boost that savings balance. Both of those things will go a long way to improving your security position. Let's talk about the second one, servicing. So servicing is actually the bank assessing your ability to be able to meet your financial commitments and to be able to meet your home loan repayments. So when the bank is assessing your servicing capacity, they're not actually doing it at the actual interest rates you're paying. They're applying a higher interest rate called the assessment rate. So whilst you might feel like your financials are quite comfortable at the moment and you're able to meet your home loan repayments plus still save on the side, that doesn't necessarily mean that the bank will automatically assume that you've got the capacity to increase your debt. Because remember, they're applying a higher interest rate. So if servicing's a little bit tight, there are some things you can do to increase your servicing capacity and in turn greatly increase your borrowing capacity. Let's explore a few of those things. The first thing you can do is to reduce and eliminate any unnecessary credit card limits, any personal loans, car loans. So let's just look at those in detail. Credit cards. Most people think that it's the balance of their credit card that's important when determining borrowing capacity, but it's actually the limit of the credit card that's important. So if you've actually got a credit card and you don't need the full limit that you currently have, then get the limit reduced. Better yet, get rid of the credit card. That's what you need to do with credit cards. Reducing or eliminating those limits will go a very long way to increasing your borrowing capacity for a home loan or an investment loan. When it comes to personal loans and car loans, the same is true. These are very short-term loans on expensive interest rates. They do negatively impact your borrowing capacity. So if you can get rid of them or even consolidate them into your home loan, that will go a long way in terms of increasing your borrowing capacity. The next big thing on servicing is being on top of your living expenses. So one of the things that the banks are doing at the moment is they're actually asking for a breakdown of your living expenses, and they're actually assessing your previous spending to determine what your living expenses actually are. So knowing your living expenses and even reducing your living expenses actually goes a long way in helping your servicing capacity and actually helps increase your borrowing capacity. So that's another big thing that you should be doing to improve your borrowing capacity. For a few more things, if you are over 50 years old, it's really important to have an exit strategy. What that means is the bank wants to know how you're going to meet the home loan repayments once you reach the age of 75 and above and enter those retirement years. If you have a solid exit strategy, then we may still be able to get you a 30-year loan term. Without a solid exit strategy, your loan term might be reduced, which also puts a strain on your borrowing capacity and a strain on your servicing capacity. So having a really good exit strategy like superannuation, for example, or some shares that you can sell, or maybe you have the plan to sell your house and downsize. Whatever that plan is, talk to us about it so that we can work out the way of maximizing your borrowing capacity. Now, if you are purchasing an investment property or if you are an investor, focusing on that rental return will also help with servicing. So buying properties that have a high rental yield will actually help you a long way there. So that was servicing. The final one is your score, your credit score. Most people don't realize this is important, but when you lodge in a finance application, the computer is the first thing that decides whether your application will proceed or won't proceed, and it's all based on your credit score. So a few things you can do to protect your credit score is make sure you meet all your financial commitments on time every time. Now, banks are penalising people that are 2 weeks or more late in their home loan repayments. So please be on top of your repayments. If you do feel like there is a time in your life when there is a bit of financial stress, get on the front foot, contact your financier and tell them that you need to enter into a repayment negotiation. That way you won't have any negative marks on your credit report. For some other simple tips on how to improve or maintain and protect your credit score, avoid unnecessary applications. So for example, don't apply for finance that you don't need. Don't apply for pre-approvals that you're not going to use. Don't shop around for finance and then not proceed with those applications, because that can be detrimental to your credit score. So that's watching your credit inquiries, because every time you apply for finance, it lodges an inquiry. And if you've got lots of inquiries in a short period of time, the credit score does get impacted. The other tips is try to avoid interest-free purchases and try to avoid things like Zip Pay and Afterpay that can actually end up being quite expensive and quite damaging to your credit score long term. Overall, the best way to increase your borrowing capacity is to use a mortgage broker, more specifically a mortgage broker from risehigh. We will sit down with you, understand your personal situation and make sure that we get you the best outcome possible. And we'd love to help you. So please get in touch if you've got any questions, or if you want to sit down and understand your borrowing capacity and talk through the specific things that are going to help you increase your borrowing capacity. We would love to be of use to you in that way. Thanks and have a great day. Bye.